Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing world of finance with a smirky twist of truth. Today, we're diving deep into Fulgent Genetics' latest quarterly report, and let's just say things are certainly interesting as they try to pivot their DNA testing business into something more. Make sure you're subscribed and join our Discord community linked in the description below for more unfiltered financial insights. Alright, let's get straight into what Fulgent Genetics filed as their quarterly report. This document essentially gives us a peek into how the company is doing financially over the last 3 months, ending June 30th of 2025. First up, the balance sheet. Think of this as a snapshot of everything the company owns and owes at a specific moment. As of June 30th, 2025, Fulgent's total assets were about $1.2 billion, which is a slight dip from roughly $1.22 billion at the end of 2024. Assets are basically what the company has that's valuable. On the other side of the coin, their total liabilities, meaning what they owe to others, were just under $91 million. This is good because it means they don't owe a huge amount compared to what they own. Now let's look at the equity side, which is essentially the owner's stake. The additional paid-in capital, which is money shareholders have paid in above the stock's face value, stands at a solid $550 million. Retained earnings, though, dipped from about $590 million to $560 million. This often means the company is reinvesting its earnings back into the business or maybe buying back its own stock. Moving on to the income statement, this is where we see how much money the company made and spent. For the 3 months ending June 30th, 2025, Fulgent reported revenues of about $81.8 million. That's a nice jump from $71 million in the same period last year. And for the first 6 months of the year, revenues hit $155.3 million, up from $135.5 million in 2024. So overall, revenue is growing. But what about the cost to actually deliver those revenue generating services? That also went up from $44.5 million to $47.4 million for the quarter. This increase in costs did eat into their gross profit, but not too much. Gross profit, which is revenue minus the direct costs, jumped from $26.5 million to $34.4 million. This is a pretty good sign. Now, operating expenses, which are all the other costs to run the business, went up significantly. From $45.4 million to $54.1 million for the quarter, a nearly 19% increase. A big chunk of that increase came from general and administrative expenses, which jumped 24% for the quarter, and also selling and marketing expenses jumped 43%. Research and development stayed pretty flat. All this spending led to an operating loss. It was around $18.9 million in the quarter for 2024 and went up to a nearly $20 million operating loss for the same period in 2025. So despite growing revenue, they are spending more to get it. Interestingly, there's a big impairment loss of $9.9 million. This usually means they've written down the value of an asset because it's not worth as much as they thought. Looking at the notes, this was due to an investment in a company called Genomics that sadly didn't work out as planned. They had to take a hit on that investment. When you add all this up, their loss before taxes narrowed slightly for the quarter, but for the 6-month period, the loss widened quite a bit, from $25.4 million to $33.2 million. Ultimately, this leads to a net loss. For the quarter, Fulgent's net loss was $18.9 million, a big jump from the $8.7 million loss in the prior year. This works out to a loss of 62 cents per share for the quarter compared to 29 cents in the previous year. It seems the company is still struggling to turn a profit despite increasing revenues. Here we see other comprehensive income or loss, which includes things like foreign currency changes. It looks like they had some gains here, but overall the comprehensive loss also widened for the quarter. This table shows the changes in the company's equity. You can see how stock options and repurchases affect the picture. The company has been buying back its own stock, costing about $7.9 million in the first half of 2025 and a much smaller amount in 2024. This can be a good signal if the company believes its stock is undervalued. Now, for the cash flow statement, how much cash is actually moving in and out? For the first 6 months of 2025, activities used about $34.6 million in cash. This is a big shift from the first 6 months of 2024, which saw over $11 million of cash provided by operations. This change is partly due to them buying some tax credits related to the Inflation Reduction Act. Investing activities provided cash this year, mainly from selling and maturing their investments in marketable securities, which they got about $81 million from. Last year, investing activities used cash because they were buying more investments. Financing activities like repurchasing stock and paying taxes related to stock options used about $13.8 million. Looking at their accounting policies, they have an allowance for credit losses, which is basically a buffer for money they might not collect from customers. This allowance increased from about $25 million to $21.4 million. They've got about $15 million invested in preferred stock of private companies. This is a bit risky because it's harder to know the true value of these investments. Fulgent breaks its business into two main parts: laboratory services and therapeutic development. Their lab services brought in all $81.8 million of revenue for the quarter. The therapeutic development side, which is trying to create new cancer drugs, had zero revenue. And when we look at adjusted operating loss, which is a way to see the core business performance without certain expenses, the therapeutic development segment actually lost nearly $4.9 million for the quarter, while lab services had an adjusted operating loss of about $2.8 million. Breaking down their lab services, revenue shows growth in precision diagnostics and anatomic pathology, but a drop in COVID-19 testing, which is no surprise. Now, for the legal stuff, Fulgent is still dealing with investigations from government agencies. They received a civil investigative demand from the Department of Justice related to allegations of unnecessary testing and improper billing. This is a serious concern. They were also facing a potential enforcement action from the SEC. But good news, the SEC recently concluded their investigation and found no reason to take action. That's a big relief. A key development happening right after this reporting period. On July 9th, 2025, Fulgent acquired NP Technologies, a company focused on drug development. This seems like a big step toward their goal of becoming a fully integrated precision medicine company. Digging into the management discussion section, they reiterate that revenue is up thanks to their lab services growing. They specifically mention precision diagnostics and anatomic pathology are doing well. A really positive point is that their cost of revenue as a percentage of revenue has actually gone down. It was 63% last year and is now 58%. This means they are becoming more efficient at delivering their services. On the controls front, management says their internal controls for financial reporting were effective. That's always good to hear. They also state there are no new material changes to their risk factors. This implies the existing risks they've talked about, like government investigations and competition, are still very much in play. And finally, let's look at their stock repurchase program. They bought back about 600,000 shares in the first half of 2025, costing nearly $11 million. This is part of a larger program, with about $139 million still available to buy back shares. So, what's the story here? Fulgent Genetics is definitely pushing hard into its therapeutic development business, highlighted by that recent acquisition of ANP. Revenue is growing well in their core lab services, and they're becoming more efficient, which is a big plus. However, they are still not profitable, and the increased spending in general and administrative areas is something to watch. The government investigations are a persistent risk, even though the SEC matter seems resolved. The company seems to be diversifying and investing in new growth areas, which is a necessary strategy for them, but it's a long road to profitability. They're in a transitional phase, and it will be crucial to see if this new drug development focus can truly pay off. Alright, that's our deep dive into Fulgent Genetics' latest filings. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description below for more unfiltered financial news. Thanks for watching. See you next time.